Welcome back to another Trade Alts tutorial. This video is for anyone who is brand new to crypto and are interested in learning more about Bitcoin and other crypto assets. I'm going to give you an overview of what Bitcoin is, how it works, and will briefly explain altcoins as well. I encourage all of you to watch this video in its entirety as I think it will be very helpful. So let's get to Bitcoin. All right, so we have our outline of topics that we're going to talk about today. So what is Bitcoin? How does Bitcoin work? Some interesting facts about it and the history of Bitcoin price movement, which I think most of you is probably why you're here. Bitcoin has obviously had some insane moves lately, so we're going to talk about that a little bit. Why is Bitcoin important? Why the poor get poorer and the rich get richer? And lastly, what are altcoins? And we have our disclaimer here. So this is not financial advice. This is strictly for educational purposes only. If you need to pause the video and read through this, please do. Okay, so what is Bitcoin? Well, Bitcoin's the first decentralized peer-to-peer payment network with no central authority or middlemen that is powered by its users. It's a completely digital money. So from a user perspective, Bitcoin's basically like cash for the internet, so you can think about it. So, and why is Bitcoin being decentralized important? I'll give you an example. So in 2015, Greece, the country, closed its banks for 6 days to stop the flood of withdrawals due to economic concerns. So think about that. You have money in a bank and the bank shut its doors and refused to give you your money. This would never happen with Bitcoin, as it's always up and running. It's always available for you to use the network. It never closes. It's open on weekends, 24/7, Christmas, doesn't matter. It's always there. Another example, if you wanted to withdraw money from an ATM. So let's say the bank's closed for the day, it's 2 a.m. Which, by the way, again, Bitcoin never closes. Let's say it's 2 a.m. You need access to cash. So there's a limit to how much you can withdraw, right? So when you go to an ATM, there's usually an ATM withdrawal limit. And transfers are also always limited in amounts and numbers. So like when you have a savings account, for instance, you're only allowed 6 withdrawals per month. Usually there's a dollar amount withdrawals. You can't, if you have $1 million in your bank account, you can't transfer $1 million, to somebody else, and in Bitcoin, there is no such thing as limits. There's no such thing as, you don't need permission from your bank to send money or deposit money. A lot of times if you deposit over $10,000 into your checking account, which I'm not sure if a lot of people know this, but if you deposit more than $10,000, you actually, your bank notifies the IRS and tells them that you made this large deposit. It's the same thing when you want to withdraw money. If you want to go to your bank and you want to withdraw, $200,000, you think it's your money, right? But you have to actually ask your bank permission to do this, and they can tell you no. But not only do you need permission from your bank to access your own money, but they also want to know why you're withdrawing it, where it's going, and they also notify the IRS again. So with Bitcoin being decentralized, there's no central party, no person that you need to ask permission to access your money. When you decide to move your money, you move it. And when you decide you want to send somebody some Bitcoin, you send it. If somebody wants to send you Bitcoin, they can send it to you. They don't need to ask anybody permission. That's what's phenomenal about it. There are literally billions of dollars that get sent on the Bitcoin network every day. And it's literally, the users decide that if they want to send it or they want to receive it. It's pretty awesome. So Bitcoin's also a store of value. You can think of it like digital gold. And Bitcoin's a public ledger. So everything is public and transparent. So there is no need for a third party or central authority to be involved. No one can stop you from transacting with anyone else. It's permissionless. So this is a very key point. So Bitcoin being permissionless, meaning you don't need permission from anyone at all to be able to interact. Like I mentioned earlier, you can send Bitcoin to anyone, anywhere in the world at any time. You cannot do this with a bank. And last but not least, Bitcoin is worldwide. So what I mean by that is there are literally millions of nodes around the world running the Bitcoin code, which helps secure the network. So these nodes are geographically distributed and they work together to process the transactions. If there was a single country even the United States, if the United States decided to outlaw Bitcoin, it would have no impact on the overall network, because of the nodes being geographically distributed all around the world. So even if one country decided to that they wanted to outlaw Bitcoin, didn't allow their citizens to use it or whatnot, it wouldn't have any effect on the overall Bitcoin network. Now, Bitcoin's not going to be shut down in the United States. If there's any risk of that, there is no chance somebody like Tesla would have just bought $1.5 billion worth of Bitcoin and agreed to accept Bitcoin as payment for their products. MicroStrategy would not have bought $3.6 billion worth of Bitcoin, and they're trying to buy another 900 million as we speak. And also BlackRock, the world's largest asset manager, managing over $8.7 trillion. That's trillion with a T. They just announced that they're getting into Bitcoin. If these guys are getting in, they're getting in for a reason. All right, so I have some Bitcoin facts for you. So it was launched on January 3rd, 2009 by Satoshi Nakamoto. Each Bitcoin is divisible by 100 million subunits called Satoshis. So again, every single Bitcoin in existence is able to be divided by 100 million units, and they're called Satoshis. Every 210,000 blocks, so approximately every 4 years, the total number of Bitcoin that miners receive is cut in half. So this is very important information, and I'm actually going to show you kind of what happens, especially to price, every 4 years once the halving happens, the halvening. Some people say halving, some people say halvening. But every 4 years or so, this event takes place, and it's a very special event. And it basically reduces the rewards that miners receive for mining Bitcoin, which in turn cuts the supply that is able to be, pushed out to the open market. So Bitcoin essentially gets more rare every time this event happens. So there's a new Bitcoin block every 10 minutes. So that's your block time. So the end result will be a total of 21 million Bitcoin, which is the supply cap, by the way. There will only ever be 21 million Bitcoin ever in existence. It's not possible for there to be any more to be mined after that. The supply is capped at 21 million. So that also gives you a rarity, kind of a rarity effect with Bitcoin, and partially what makes Bitcoin so valuable. And the last Bitcoin should be mined somewhere around the year 2140. So Bitcoin started out with the 50 Bitcoin block reward. So when you started mining Bitcoin back in the day, you were rewarded with 50 Bitcoin per block that you mined, which in today's valuation, I believe that's around $2.5 million, something crazy like that. So you started out earning 50 Bitcoin per block that you mined. And now that each block is worth only 6.25 Bitcoin due to the halving cycle that has taken place 3 times now. So you started out with 50 Bitcoin when Bitcoin first started. Then there was a halvening, and that Bitcoin block reward went down to 25 Bitcoin. And then there was another halving that happened, and it went down from 25 to 12.5 Bitcoin. And then just last year, May of 2020, there was actually another halving, and the block reward went from 12.5 Bitcoin down to 6.25 Bitcoin. So the next halving date is scheduled to be in 2024, sometime during that year, and you will see another block reward reduction down from 6.25 Bitcoin to 3.125 Bitcoin. And also, so this is pretty insane. When Bitcoin first came out, there was actually a Bitcoin faucet that used to give away 5 Bitcoin. All you had to do was go to this page, this web page, and you can see if you type in the CAPTCHA, right? And you put your Bitcoin address there in that blank box and click get some. Every time that you did that, it would literally give you 5 Bitcoin, which today, that's worth over $250,000, which is insane. You used to actually, you used to be able to get Bitcoin for free, and they would give you 5 Bitcoin just for, and it was an incentive, right? Like back then, Bitcoin wasn't worth very much. It wasn't worth anything. It was just an incentive to get people to check Bitcoin out, to see what it was all about, interact with the network, you know. Like looking back at this, I mean, that's pretty insane that like considering what Bitcoin is currently worth, you know, we're sitting at $52,000 per Bitcoin right now. And, you know, if you had been a part of, Bitcoin, you know, back when this was a thing, I mean, that's pretty crazy that you could, you know, if you held your Bitcoin that you got for free, it's worth a significant amount of money today. And, you know, the funny thing is there's obviously this faucet doesn't exist anymore. There's no faucets out there giving you Bitcoin, you know, free Bitcoin to my knowledge. But these days, it's called airdrops. And there's a lot of really crazy crypto airdrops, which I'm not going to talk about in this video, but if you want to definitely like and subscribe. And I have a lot of these videos coming out that are going to teach you, they're going to teach you how to get these airdrops, which is essentially free money. And, you know, just last year, on a side note, I made, you know, I've made well over $20,000 just in these free airdrops. So it's been a pretty crazy, and I think that's really in the last 6 months or so. But I'm going to be doing some videos on airdrops. If you're interested, definitely like and subscribe. I would appreciate it. And you're going to see those videos when they come out. So next, I'm going to actually, not ready for that yet. I'm going to go to the BLX chart. So this chart, okay, is the BLX chart, which has the longest price action history for Bitcoin. So this goes back to the very beginning days. And you can see all the way back here when Bitcoin, you know, back in 2010, when Bitcoin was literally pennies. Okay, so if you scroll back here, I gotta take it off log scale. But you can see, I mean, Bitcoin was literally 50 cents, you know, 30 cents here. But anyway, the point of this is every time, like, I want to explain the halving cycles and what happens to price, okay? So this purple line right here is November. So the first halving happened in November 28th of 2012. So that's the first time the block reward was reduced from 50 Bitcoin down to 25 Bitcoin. So this is what I was just talking about. And you can see that this is right here is when that date happened, and what happened after the halving, after the block reward was reduced and there was less supply from the miners being sent to the market. And you can see there was a very big parabolic move from this point up to, I think the top was around $1,100, $1,188, something like that. So Bitcoin literally went from $13, okay, all the way up to almost $1,200 in a very short amount of time. And you can fast forward to this next purple line here. So this is July of 2016. This is when the second halving event took place. What happened to price after the second halving took place? You can see there was a little bit of consolidation up here before. Basically what happened was a big ramp up all the way up to the current top, or not the current top, but the previous top of $20,000. So Bitcoin halved right here around $660, something like that. It's kind of hard to tell when you're not zoomed in all the way, but around 600 bucks. And then proceeded to move all the way up to $20,000. And if you want to look at this from a percentage standpoint, Bitcoin literally gained almost 3,000% in a very short amount of time. And once again, we're going to fast forward to this halving, which happened in May of 2020. So this just happened last year. And you can see, here's your halving date right here. And what happened to the Bitcoin price after this event happened. You can see we're currently in the middle of another really nice run to the upside. So it's very similar to what happened over here, right? So you got your halving and you got your run up to $20,000 before you retrace. Same thing's happening here. This is the recent halving in May 2020. And right now we're getting yet another run to the upside. So real briefly, so I talked about the halving, what that is and why it's so important to Bitcoin. And again, when you have your halving events take place, the miner rewards are being cut in half. So if the miner rewards are being cut in half, that's a lot less Bitcoin that the miners are able to sell to the open market. So that makes Bitcoin even more rare. Every time this is going to take place, it will continue to make Bitcoin even more rare than it already is. And real briefly, again, my channel is typically focused on technical analysis. So this is actually more of what my channel does. I do the tutorials, as people request it or I see an opportunity to do one. But again, my channel is mostly focused on technical analysis and what price does. So while we're here, I'm just going to show you real briefly what this is, since we're already here. So this is a logarithmic growth curve. And you can see, so this is on a weekly time frame, okay? So this is all the way back in 2010, all the way to current price way up here. And what this logarithmic growth curve has done a very nice job of is you can see it's actually caught the highs and the lows pretty well, right? So all the way from back here, you can see it hit the top of the logarithmic growth curve here at around $31 before it retraced down to the bottom. You kind of grind it around the bottom for a bit before you got another spike up to the top of the growth curve. And then you got your move down. And these are really big moves, by the way. So, and just to touch on it, a lot of people are scared of Bitcoin. They're scared of crypto because it's very volatile, and you should be. It's a very volatile market. If you don't know what you're doing, it can be very, it could be very scary watching these fluctuations. But for those of you who have been in crypto for a long time, you know what to expect. A lot of these moves really don't scare you. And again, when it comes down to this chart very clearly explains why the moves shouldn't necessarily scare you, because you can see that Bitcoin is, it has a history of repeating the same kind of price patterns over and over again. And you can see we're in the middle of another really pretty spectacular run up. But anyway, so it caught the high over here. Caught your low, caught your high, caught your low, right? Seeing the pattern? As we zoom in, here's your run up to 20,000 before you got your move all the way back down to low $3,000. So that's a huge, you're talking 80+% retracement there, which rightfully so should scare a lot of people. And then you can see that we are starting another move up. Now, the only time that Bitcoin has actually broke this logarithmic growth curve, which is a little worrying, but if you actually zoom in and you see how when we broke this, March 9th, 2020. Well, what happened in March of 2020? Coronavirus happened, right? The entire world was panicking. Every financial market in the world was panicking. Everything was going down. So this is an outlier as far as I'm concerned. This is a very special event that you really don't expect to occur again anytime soon and disrupt markets like that did. But this is kind of your outlier, right? But you can see price made its way right back to the channel, and here we are again making another run up. So where do we expect Bitcoin to go? Now, expect is kind of a dangerous word to use as a trader, but if you look again at previous history, okay, you can see that we hit the top of the logarithmic growth curve every single time. And 3 times makes a pattern to me, right? So this has happened 3 times. So will it happen a 4th time? Really, it's hard to say. But where does that put us? So the top of this, and this is assuming that, this is very aggressive. This is assuming that we hit it, next week, which is very unlikely to happen, okay? And the longer that kind of time moves on, you can see that the growth curve is moving higher. So the longer it takes for Bitcoin to hit the top of this trend line up here, the better, if you're bullish, because that means price is going to be higher. So again, the immediate, if we were to go up here this week or next week, you're looking just, right around $100,000. So currently, from where we sit, that's a 2x, just from where Bitcoin currently is and the top of the logarithmic growth curve, it's about $100,000. So, but, again, as time moves on, so let's say that, maybe we hit the top of this trend line at the end of the year, which is reasonable. That would put Bitcoin at around $146,000. So, is this possible? 100% is possible. It's happened, you can see right here. It's happened 3 previous times in Bitcoin's history. And, in trading, three times it's a pattern. It's something that, you can use to your advantage. But Bitcoin also gets these pullbacks. You can see in this last run up, you got several pullbacks, and these are very big. They look small here, but these are actually really big pullbacks. Currently, we did have a nice pullback already once. We could absolutely have another couple pullbacks. It's not a big deal. So like if you see Bitcoin drop down to 40,000 or anything, it's not the end of the world. Like it's like you kind of expect these things to happen as you're making this type of aggressive advance, up as you're seeing. So that's kind of something to take into consideration if you're new to the market, is be very careful where you buy, because again, price could move very violently against you, which scares a lot of new people. But again, for the people who have been here a long time, it doesn't really scare you that much. And usually that's a good opportunity for the experienced traders out there. But anyway, I'll get back to Bitcoin here, but I just wanted to take a second and explain kind of what Bitcoin was doing on a high time frame and why the halvening cycles are so critical to Bitcoin. That way you understand like what this actually means. So that's the Bitcoin chart for you. So why is Bitcoin important? So first off, for struggling fiat systems. So our fiat system, the US dollar, it's a belief system that our money's worth something. It's really that simple. It used to be backed by gold. Now it's just a belief that our dollar is worth $1. Also potential, for currency instability. You think of Greece, like I talked about. All of the problems that they had in 2015. You think Venezuela, Zimbabwe, hyperinflation, just crazy instances. People would literally go to work for their money, get paid, and by the time they were able to take their paycheck to go buy groceries, they couldn't buy anything because the money had inflated so much that like they literally had no purchasing power. You think of the 2008 financial crisis, the 2020 coronavirus, that permanently affected world markets. So in 2008, we had the government, we had the bailouts. We had stimulus checks in 2008. In 2020, same thing with coronavirus. Massive multi-trillions of dollars were spent in stimulus. And there's another potential $1.9 trillion bailout on the way. Also, something that's pretty nuts. 22% of all US dollars was printed in 2020. Just think about that. Literally 22% of all US dollars in existence was printed last year. So Bitcoin, it gains value over time, right? So due to supply cap, 21 million Bitcoin, there will never ever be more than 21 million. So it's rare. There's a fixed rate of Bitcoin hitting the market every day, or able. I shouldn't say it hits the market every day because that's not true. It's able to hit the market, right? If like for all of the Bitcoin that's being mined, if the miners chose to sell it, there's only X amount of Bitcoin that I could sell every day, right? So there are 900 new Bitcoin mined each day. That could be potentially pushed into the market, but we already know that. It's programmed to work that way. It will continue to decrease over time after each halving, which I talked about in my previous slide when I showed you the chart, the effect of the halving cycle. And in May 2020, it used to be 1,800 Bitcoin per day. But again, after the halving took place, it was cut in half to 900. And after the next halving takes place in 2024, it's not going to be 900 anymore. It's going to be 450 and so on and so forth. It's going to continue to get less and less every single halving cycle. And then you have Bitcoin versus gold. So why is Bitcoin better than gold? First off, gold is heavy. It's hard to transport. I mean, literally, you've probably seen some pictures of, you think of places like Fort Knox, or you think of countries that have their gold in vaults, and you just see pallets of gold everywhere. Like, it's heavy, it's hard to transport. Gold is not easily divisible. Okay. So, if for some reason, the monetary system collapsed and all the world had left was gold. So if I said, hey, like, you want to buy this from me, I need $5 in gold. Well, that's going to be really hard to do considering, the state of gold. And you have gold bars, you have gold coins. It's not like you could very easily, divide your gold up to pay out appropriate amounts. Also, gold is inflationary. So a lot of people don't really think about that, but gold's inflationary with an approximate 2 to 3% inflation rate per year. As the gold is mined from the earth, right, it's continually adding to the supply of the amount of the tons of gold that's on the earth's surface, and will only increase with asteroid mining in the future. So you might think this is crazy, it sounds insane, but it's coming. So if you haven't looked into asteroid mining, you should look into it, because it's a real thing. People are actually trying. There are asteroids out there that are worth numbers I can't even pronounce. It's like quadrillions of dollars, and platinum and gold, that they know is out there. And kind of the hard part is being able to actually bring that back to earth. But that's something that, believe me, people are actually working on. If they're able to do that, which, considering technology and how fast it's advancing, it's highly probable. I would say that, some point down the road, it could be 10 years, 20, 50 years. It really, you really don't know. But the point is, at some point, it's likely that that's going to be a thing. And that's going to drastically change the supply of precious metals on the earth. And when that happens, obviously, if you introduce a ton of new supply into the precious metals market, it's going to drop prices significantly. So that's something to think about. It's probably a ways away, but it's definitely something that you should be aware of. And then, so fun fact number 2. So 10,000 Bitcoin for pizza. One of the first Bitcoin transactions ever. I think it was the first, actually, it was the first case of somebody using Bitcoin to actually purchase something, if I'm correct. But it was for 2 pizzas, and I'm pretty sure it was from Papa John's. But basically, the owner of the Bitcoin managed to strike a deal with the, I don't know if it's the owner or whatnot, doesn't matter. But basically, he was able to pay 10,000 Bitcoin for 2 large pizzas. I think it was that were bought with the Bitcoin. So anyway, in today's valuation, those pizzas now cost that person $520 million. So that's what 10,000 Bitcoin is currently worth. But the thing is, like, back then, it sounds insane, but back then, like, this actually was the first instance of Bitcoin having real value, right? Like, you were able to exchange Bitcoin for an object, or for something that you needed, right? So it was a really important event that took place. And let's just say I don't think I'll be trading my Bitcoin for pizza anytime soon, but you never know. So why do the poor get poorer and the rich get richer? So I'll tell you what, if you take anything away from this video, I hope it's this. This not only applies to Bitcoin, but it applies to money in general, and the difference between those who are wealthy and who aren't. And like, this is a really generic example, and I could spend hours talking about like this particular subject, but to keep it Bitcoin related, this is why Bitcoin has become of interest to wealthy people, publicly traded companies, etc. You have Tesla, MicroStrategies buying billions of dollars worth of it. And they're looking to preserve and grow their wealth. So why do poor get poorer, the rich get richer? First off, poor people, they don't understand how money works, right? They feel like they're constantly behind. You have tons of bills, you can't get ahead. And oftentimes you have a victim mentality. So it's, you'll hear this, like, it's the government's fault that I'm unable to get ahead, or, my boss, he didn't or she didn't, give me the promotion or the raise, and that's why I can't, that's why I am where I am at. And then you have poor people's actions, so holding onto cash. So this is what poor people do. And I don't mean to offend anybody, by the way. This is not to offend anybody. It's just to help people understand the differences between, like, decision making when it comes to finances, and why, like, just switching your thinking around could help you make headway, when it comes to financial decisions and whatnot. But poor people's actions. So they hold on to cash thinking saving is the way to go. So first off, you're wrong, because how much interest are you generating off of that cash that you're holding? So if you're holding your cash under a mattress, you're getting nothing for it, which is basically the same as you parking your money in a savings account for, or putting it into a certificate of deposit or something. You're essentially getting nothing for it. And you are definitely not outpacing inflation. So basically, every year that you hold cash, you might as well light some of it on fire, because that's essentially what's happening to your purchasing power, to your ability to use the cash that you have to make the same purchases at a future date. So one really important thing that I want you to know is cash today, right? $1 today will always be worth more than $1 tomorrow. $1 today always will be worth more than it is tomorrow. And it's most certainly true when you look years out. $1 today is absolutely going to be worth more than it will be this time next year. So another thing that poor people do is they don't have an inflation adjusted wage pay increase, right? So like if you rely on your employer or whatever it is to, like, let's say you make $10 an hour, okay? If you make $10 an hour this year, and then it comes time next year for your raise, and let's say you get a raise to $10.25 or whatever it is. If your raise is not, and this is even assuming you get a raise, first of all, okay, this is assuming you get a raise, but let's say you get a raise. More often than not, your raise doesn't keep up with the lack of buying power that you're going to have the next year. Okay, so if it doesn't outpace inflation, you are losing buying power every year. So you have to think about that, okay? And that's something that a lot of people don't think about, because a lot of people go to work every day. It's hard enough to, you pay your bills, you do what you're supposed to do. A lot of people don't have time to sit down and think about money and why, like what is actually at the root cause of their issues. And I'll tell you that if you're not beating inflation, you're losing. And it only gets worse over time. In the last 100 years, okay, the buying power of $1 has been reduced by over 95%. So it literally takes, right, 95%, like it takes significantly more dollars today to purchase something. You think of a cup of coffee, right? A cup of coffee used to be cheap. Gas used to be cheap. And now those items take significantly more dollars to buy the same amount. And it's really simply due to inflation. Now moving on to rich people. So rich people understand how money works. They make sure their pay stays ahead of the inflation curve. So like if you own your own company, like, I own my own business. I make sure that what I make every year, that my buying power stays, I want my buying power to increase every year, right? And it sounds easier said than done, but it's the point. Like when you have something like inflation, you got to stay ahead of it. So you have to make sure that you're making more money every year to stay ahead. Like you need your buying power to at least stay the same, right? And rich people are usually problem solvers. So instead of having a victim mentality, blaming other people, it's the president's fault, or it's the governor's fault, or it's my boss's fault, or whatever it is, right? Like instead of just thinking about all of the problems that we have, like you have to become a problem solver, and you have to think of ways, like I'm discussing here, like you have to think of ways to get ahead and not be comfortable and not be happy with being in certain situations. So what do rich people do ultimately? And how does this relate to Bitcoin? So first of all, rich people hate cash. They don't like cash because cash is, it's like I said, if you hold cash for any length of time, you are losing your purchasing power. You're losing your monetary energy. Okay. So instead of holding cash, rich people usually put cash to work for them instead of holding it. So that's why they buy investment assets. They buy Bitcoin, right? Bitcoin has obviously been appreciating year over year, an insane amount of percent. And, you know, again, if history is any indication, it will likely continue to do so over time. You know, investment assets like stocks, real estate, precious metals, fine art, collectible cards, stamps. I mean, whatever it is that you collect or whatever it is that's worth money, right? As long as people are, as long as there's inflation, as long as whatever that asset continues to outperform and it keeps your net worth, it keeps your value outpacing inflation, that's what rich people focus on. And it's putting the cash to work for them instead of holding it. And that's why, like, so when you own real estate, you know, if you look at your house 10, 20 years ago, what you know, what your land was worth, what your house was worth, in majority of cases, I would argue it's probably your prices are significantly higher today than they were 10 to 20 years ago. And that is directly due to inflation. It's directly due to the fact that it costs more money every year to buy the same item. So that's why instead of holding cash, you don't want cash. Okay, it's not financial advice, but I'm just trying to explain how this works. But you want to be purchasing investment grade assets that are going to help you maintain your purchasing power. So again, going back to the publicly traded companies, the publicly traded companies, so like for MicroStrategy, who just purchased $3.6 billion in Bitcoin, and they're in the process right now of trying to purchase another $900 million in Bitcoin. You have Tesla last month bought $1.5 billion in Bitcoin. You know, publicly traded companies, they have a fiduciary duty, meaning they have a responsibility to their shareholders to maximize shareholder value. One can argue that not having Bitcoin on your balance sheet, like Tesla, and a growing list of other publicly traded companies, it could become a liability in the future. I mean, you would argue that if you're just sitting on hordes of cash, you think of other companies like Apple, Amazon, they have billions and billions of dollars in cash sitting there doing nothing, literally losing. They're losing monetary energy. They're losing cash due to inflation. They need a place to put that money. And lately, Bitcoin has been an avenue where you have seen some of these companies end up putting, you know, they put some of their balance sheet into Bitcoin. Tesla just made more just based off of Bitcoin appreciation, the price appreciation. They made more in the last month through Bitcoin appreciating in price than they made in selling cars all of last year. That's a real fact. That's pretty insane. I mean, I'm not saying that's going to happen permanently, but I think it really does open up people's eyes as to what can happen, you know, when you're in the right assets. So Bitcoin protects your wealth. So I already talked about a little bit of that in the previous slide, but it protects your wealth due to there not being inflation or a way for someone to artificially increase the supply like you can with the money supply, with the US dollar supply, right? So if Bitcoin is your core unit of account, so think of it instead of dollars, right? Dollars not, you know, if Bitcoin was what you focused on, you can stop worrying about investing, okay? And just focus on becoming a saver, which in the legacy finance system or any fiat system, the US dollar system, I just explained to you why investors win and savers lose, right? So investors, they want to invest in, you know, appreciating assets, you know, investment grade assets. I already explained in Bitcoin, stocks, bonds, fine art, that type of stuff. Those people win because they understand how money works. Savers lose because they don't understand how money works and they're losing monetary energy. They're losing power, purchasing power every single minute that they're holding that cash. Okay. And in the Bitcoin or decentralized system, savers win because they are saving an asset that appreciates in value and is rare. It's unable to be inflated beyond what is known and set in the code, unlike the US dollar, which no one knows what the rate of inflation actually is this year or next year. You don't know how much is going to be printed. just like we had trillions of dollars get printed, this last year because of the coronavirus and all of that stuff. But, in the Bitcoin system, you know exactly what the rules are, and you know exactly what the game is. And with the other fiat systems around the world, US dollar, you don't know. So think of Bitcoin like land, okay? Land it's a lot like land in a way. Land is valuable. Land continues to rise in price because there's a finite supply of it. We know how many square miles or how many square feet of land there are in the world. There's only so much that will ever exist on the planet Earth. And the dollar will continue to lose its purchasing power, therefore contributing to the rise in land prices, okay? It will take more dollars next year to buy the same piece of land right now in most cases. So on average, sometimes you have real estate corrections or whatnot, but overall, that is always going to be the case. It will usually almost always take more dollars next year to buy the same piece of land right now. So land is scarce to a degree, and so is Bitcoin. There's only going to be a certain amount. So fun fact number 3, there is not enough Bitcoin in existence for every millionaire in the world to own one full Bitcoin. So if you own one full Bitcoin, you have accomplished something that not every millionaire in the world will be able to say that they've done, because it's literally impossible. Fun fact number 4, there will only be enough Bitcoin in existence for every person in the world to own 0.027 Bitcoin. So real quickly, there are only 21 million Bitcoin that can ever be in existence. That's the maximum possible, which, by the way, there's an estimated, it's hard to say, no one really knows, but there's an estimated 1 to maybe even up to 4 million Bitcoin that are lost forever. So you think about that. There's already only ever going to be 21 million Bitcoin in existence, but if you take away the Bitcoin that we know, there's a fair amount of it that's actually lost forever due to people losing their wallet passwords, their private keys, whatever it is. There's I can say with 100% certainty, there was a less than 21 billion Bitcoin, but for the sake of this, we'll just use 21 million Bitcoin. So if you take that number and you divide it by 7.8 billion people, which is the current world's population, it's a lot of people, you get 0.0269. So I just rounded it up. But anyway, that is a very small amount of Bitcoin per person. And as the population continues to grow, it's only going to get lower. So that's a very small amount of Bitcoin that, if it came to the point where everybody was trying to buy Bitcoin, literally every single person, that's as good as it could possibly get. So I want you to watch this quick YouTube clip from Michael Saylor. He's actually doing an interview. And I want to thank Cointelegraph, by the way, and Austin Davis for the clip. I think it's a really powerful message from the CEO and co-founder of MicroStrategy. Currently owns $3.6 billion. Like I mentioned before, he's actually in the process of buying almost another $1 billion worth. He used to not be a fan of Bitcoin. I've seen some public tweets, dating back in 2013, where he was thinking that Bitcoin was going to go the way of internet gambling and so on and so forth. Like, he was not a fan of Bitcoin, but he's obviously changed his tune. So I want you to listen to just this real short clip because I think it's very powerful.
Perspective on Bitcoin mining. All right, so we can wrap, but before we do, any motivational words for folks that should get into to Bitcoin? I know you've been great at calling people out, top level people that should get in, but in general to the public, any motivational words of why they should pay attention to this thing called Bitcoin?
Look, I think Bitcoin's a bank in cyberspace. It's, and your choices are you save your money in a traditional, conventional fiat bank, and you're going to watch your purchasing power dwindle down over the next decade to the point where it'll buy nothing. Or you can gamble in the stock market that's maybe rigged against you, and if it's not rigged against you, then you'll be buying companies that are generating cash flows in fiat currency that is collapsing in value. So even if you think you've avoided the problem of currency weakening, of storing your money in a bank, you haven't really, because if you're buying real estate, bonds, or stocks that also generate fiat currency, and that currency is collapsing in value, you've got the same problem. Now you have a fiat derivative. Or you can save your monetary energy, save your purchasing power and your wealth in Bitcoin, which is not a fiat derivative, that is not collapsing in value, that is going to appreciate against all these other currencies as they collapse in value. And you don't have to gamble on whether or not Apple will ship a good iPhone 14 or, the next generation of this product or that product or this service, or what that government will do to this company and what that CEO will do. All very complicated, anxiety inducing. Bitcoin is a simple thing, right? You're buying into a thermodynamically sound engineered monetary network, the first workable monetary network in the history of the world, or first digital monetary network in the history of the world. It's a gift. Once in 1,000 years, do you actually see the invention of a fundamentally new thing? This is our once in 1,000 year opportunity. You get to buy into it early. What would it be like if you owned 10% of all the electricity that was ever going to be pumped? Or what if you could buy 1% of all the running water that's ever going to be pumped, right? That's what this is, right? It's 1% of all the fire that's ever going to be lit. You have a chance to buy a percentage of the future. Seems like a no-brainer to me.
Thank you for being the way you are and taking the moves that you're doing, because I know that you're probably facing opposition, but you know what's right. So thanks for sticking true to yourself.
Yep. Thanks for hosting me, Austin.
So as you can see, that's pretty powerful words. And I really, really like that clip. And this is our final slide. So it's what is an altcoin? An altcoin, or an alt, just like my name, trade alts, for short, is any other coin or token that is not Bitcoin. So for example, Ethereum is the leader of the altcoin market. It's number 2 in market cap, second only to Bitcoin, and is widely considered to be the barometer of how the rest of the altcoin market is doing. So usually when Ethereum is doing very well, so are the rest of the altcoins. And when Ethereum is not doing so well, typically the rest of the altcoins will follow. But other examples of altcoins, so you have Litecoin, which I'm sure a lot of people have probably heard about. Litecoin, they kind of, if you compare, or if you say that Bitcoin is gold, a lot of people will say Litecoin is the silver to Bitcoin's gold. I'm not sure if I really agree with that or not, but that's kind of like how people view Litecoin. Polkadot, it's a project I really like. Not financial advice, obviously, but I think Polkadot is pretty awesome. I think it's going to be a really big time project, especially this year. And then you have something like Dogecoin, which is an incredible example of what happens when people believe in making something valuable. So Doge was created as a joke. It's really a joke project, but currently it has a market cap of $7.3 billion. So, I mean, that's pretty impressive. You've probably heard it in the news. CNBC's probably been talking about it. Elon Musk has definitely been talking about it, been tweeting all about Dogecoin. You have celebrities that are getting into Dogecoin. But I know Elon Musk is well aware of what Dogecoin is, but I don't think a lot of other people are. And the fact that it really is kind of, it's a project that was created as a joke. But when you get a lot of people buying into it and they create value, they give it value, then, it is what it is. So how many altcoins are there? Currently, there are almost 6,300 and growing every single day, according to coinecho.com. So if you go on there, it's a great site. I use it every single day. It shows you the list of all the altcoins in existence, gives you information about them. But there are almost 6,300, so there are a lot of projects out there right now. And finally, unit bias. Don't have it. So what is unit bias? It's basically like when people would rather buy more of a whole than if they were buying a fraction. So an example is, like, I can only buy, maybe 0.02 Bitcoin. But instead of buying 0.02 Bitcoin, which, by the way, you can do. I know that's actually a common misconception. Like, people think with Bitcoin that you have to, you can't buy it unless you buy a whole one. That's not true. You can buy fractions. You can buy $10 of Bitcoin. You can buy $100 in Bitcoin. It doesn't matter. You do not have to spend $52,000 and buy an entire Bitcoin. Now, you certainly can, but it's not required. You don't have to do it. You can buy fractions. But back to this example. So, like, if you can only buy 0.02 Bitcoin, but you could buy a whole Litecoin or thousands of Tron or XDNA or whatever. All, you know, again, there's thousands of projects out there. For some reason, it just feels better to buy a whole unit than a fraction, right? So as a result, like a lot of new investors, a lot of new people to the space, they look for cheap tokens, and you know, I say quote cheap, that cost pennies or even dollars. You know, it catches the eyes of new investors who are new to the crypto space. Well, you have something like Bitcoin that looks really expensive to people, right? But really, it's just having unit bias. It's not understanding that, like, even though something might cost a few pennies or $1 or $2 or whatever, it seems cheap because you can buy a whole one and it doesn't cost you much. But in reality, there are a lot of other factors at play. Like, just because something is 5 cents, it doesn't mean that it's cheap. It doesn't mean that it's, you know, it's undervalued and, you know, maybe it can go to $1,000. I mean, I'm not saying that it can't, but, you know, it is very possible for something that is in the pennies, that is priced in pennies, to be very, very overvalued. So that's very possible. I won't get into that too much in this video, but I just wanted to mention it. Unit bias, try not to have it. And it's not always better to have more of something, you know, to worry about owning whole amounts, like whole Litecoins or whole, you know, thousands of Tron or whatever the case is. A lot of times it's better to be in, and this isn't financial advice, but a lot of times it is better to be in the projects that, you know, they might look expensive, they might sound expensive, but at the end of the day, those are the ones that are really appreciating. And also, like, when you're comparing altcoins versus Bitcoins, like that's kind of like one aspect of things that people don't consider, right? Like they don't, like, there's actually and again, my channel is mostly based on technical analysis. I spend literally 12 hours a day doing this. And if you're interested in learning how to read charts, how to become a trader, you can join my Discord, which I'll put a link in the description below. But really, technical analysis, for me, it helps potentially make better purchasing decisions and better trades, because it helps determine which altcoin might be better to buy, or it helps determine maybe it's better, instead of buying that altcoin, if it's not doing well against Bitcoin, then maybe it's better for me just to buy Bitcoin at a particular time. But that's really, you know, I spend a lot of time doing that every single day. If you have questions or you're interested about learning how to trade, again, feel free to join my trading Discord. We have a group of people in there who are really awesome. They're really nice and very friendly, very helpful. So we can go to my social page. This is where you can find me. So Twitter at Trade Crypto Alts, Facebook, I just created a new Facebook page. You can find me there. Feel free to stop by, ask questions. I'm always willing to help people. And then on YouTube, which is where you're watching this right now, but I have a brand new YouTube channel I started a couple weeks ago. So if you could subscribe to this video, give this video a like, it really helps my channel grow. I would appreciate it, especially if you found this information useful to you. And then lastly, I'm also on Telegram, so you can find me there for those of you who are on Telegram. I'm also trying to post some of the same information there. But I'm mostly in Discord all day long, so I will leave that link. Feel free to join. It's a really awesome group of traders on there. And if you have beginner questions about exchanges and whatnot, or any beginner questions, totally come ask me. Happy to help. And I'm just appreciative that you took time out of your day to watch this video. But that being said, congratulations if you made it to this point in the video. If you found value in what I said, again, please give me a thumbs up. It would really help my channel, and subscribe for my other content. I'm also going to be doing some other tutorials on, you know, other exchanges, how to buy Bitcoin, how to buy Ethereum, that type of stuff if you're interested. And if you're still a bit unclear as to what Bitcoin is, definitely give this video a rewatch, because I think as you immerse yourself in it, I think it'll start to click a little bit more. But hopefully I was thorough enough to kind of at least give you a little bit of an intro into Bitcoin. So that being said, thanks again for watching. Have a great day.